Lithium Americas stock closed Friday at $9.04 per share, up $2.18 on the day, a gain of almost 32%. This dramatic move followed the official confirmation earlier in the week that the United States government will take a 5% equity stake in Lithium Americas and its Thacker Pass joint venture with General Motors. The stock surge represents a powerful revaluation as investors shift from speculation to confirmation and as new buyers enter the name. The rally began when the Department of Energy announced that it would amend its existing $2.26 billion loan to the Thacker Pass project and take equity exposure via no-cost warrants. General Motors remains a 38% partner in Phase 1 with offtake rights to the lithium produced. This combination of a major automaker and a federal government stake is unprecedented in the U.S. lithium space and marks a turning point for Lithium Americas. Friday's session built on Wednesday's 23% gain and Thursday's modest 2.4% pullback. The move to $9.04 reflects three main forces. First, the market is repricing Lithium Americas to reflect its new risk profile. Before the confirmation, it was viewed as a high-risk development stage miner. After the confirmation, it is perceived as a critical minerals project backed by government and industry. Second, there is a powerful short squeeze underway. Traders who bet against the stock during the rumor phase or who hedged lithium exposure are being forced to cover as the price rises. Third, institutional and retail investors who waited for official confirmation are now entering, adding fresh buying pressure. Momentum algorithms and quantitative systems are also amplifying the move. Breakouts of this size on heavy volume trigger automated buying programs. The stock surge through technical resistance levels invites additional flows. This combination of fundamental revaluation, force covering, new entry, and algorithmic buying can produce very large percentage moves in a short period of time. Nothing new about the fundamentals was announced on Friday beyond what was already known. The Department of Energy stake is confirmed. The stake comes via warrants tied to the existing loan. General Motors retains its offtake rights. The company has not yet published an SEC filing with the full terms of the agreement. Dilution, governance rights, warrant strike prices, and other conditions remain unknown. The headline alone has been enough to drive a major re-rating. The perception of financing and political risk has changed. With the United States government on board, the project is far less likely to stall for lack of capital or regulatory support. However, execution risk remains. Building a large-scale lithium mine is complex. Cost overruns, permitting challenges, supply chain issues, and commodity price volatility still matter. Government backing does not eliminate those risks, it mitigates some of them. From a technical standpoint, $9 is an important psychological level. Holding above $8.50 could signal the beginning of a new base. Support zones may form in the $7 region, where the breakout began. If the stock can consolidate above 8 and then push through 9 with volume, the next psychological target would be $10. On the downside, failure to hold 7 could trigger a retracement back towards 6.5. The focus now shifts from the fact of the government stake to the terms of the stake. Investors will be watching for the company's SEC filing detailing the warrant structure, dilution impact, and any governance rights the government receives. This document will allow analysts to model the company's future share count and project cash flows. Comments from the Department of Energy or General Motors could also move the stock if they outline timelines or strategic intentions. Analyst upgrades and new price targets are likely in the coming days as Wall Street incorporates the confirmed stake into their models. The broader context matters as well. Lithium Americas has become the test case for how far the United States government will go to secure domestic supply chains for critical minerals. Electric vehicle adoption is accelerating. The country is trying to reduce dependence on foreign suppliers. Thacker Pass is positioned at the center of this policy. That narrative attracts thematic capital beyond traditional mining investors. Investors should also watch lithium market fundamentals. Government backing helps, but the economics still depend on lithium prices and demand for electric vehicles. Any surprise moves in lithium pricing or EV policy could either amplify or dampen Lithium Americas' momentum. It is useful to think in scenarios. In the bull case, the terms of the stake are favorable, dilution is minimal, and Lithium Americas becomes the flagship U.S. lithium project with strong government and industrial partners. The stock consolidates above $9 and moves to new highs as clarity emerges. In the base case, the stock trades sideways between 7 and 9 while the market waits for details. Volatility remains, but the story stays positive. In the caution case, the terms disappoint or new risks emerge, leading to a retracement toward support. The key triggers to watch are the SEC filing with full details of the stake, press releases from Lithium Americas, statements from the Department of Energy or General Motors, analyst price target revisions, and sector sentiment in lithium and critical minerals. Each of these can influence the stock's next move. Friday's surge shows that Lithium Americas has moved from a speculative bet to a strategic asset. The confirmation of the U.S. stake removes a major uncertainty and attracts new types of investors. The next phase will be about execution and terms. Holding gains above key support levels while details emerge will be a sign of strength. Sharp reversals on high volume could signal disappointment or profit-taking. Investors who understand this dynamic can better navigate the volatility. A stock can rally dramatically on confirmation but still face swings as details are digested. Risk management remains important. Government involvement reduces some risks but does not guarantee a straight line up. Lithium Americas now sits at the intersection of policy and profit. Its performance will not only reflect the economics of lithium production but also the success of public-private partnership in critical minerals. Friday's 32% move is the market's immediate reaction to that shift. The coming weeks will determine how sustainable the new valuation is. In summary, Lithium Americas closed Friday at $9.04, up $2.18 or almost 32%. The rally was driven by the confirmed U.S. government stake, forced short covering, fresh institutional entry, and momentum flows. No new negative news emerged. The story has shifted from speculation to confirmation, and now to analysis of terms and execution. The key levels to watch are support around $7 and resistance around $9 and $10. The key catalysts are the SEC filing, government and GM statements, analyst updates, and lithium market fundamentals. The company has become a bellwether for U.S. critical mineral policy. Investors should expect continued volatility as the market digests details and builds a new base.